Hey guys, welcome to my trading channel. My name is Mary and I'm here to be your personal trader and guide on your trading journey. I've created this YouTube channel to share my knowledge and experiences with you, so make sure to hit that subscribe button as there will be plenty of valuable content coming your way. If you're interested in joining my live trading sessions and receiving signals directly from me, do not forget to subscribe to my Telegram channel. You can find the link in the video description. Today, I will tell you about an important pattern that helps me and will help you make profitable decisions in trading. This pattern is called a pin bar. First, let's understand what it represents. A pin bar is a single candlestick that follows two rules. Firstly, it has long wicks on one side and on the other. Traders often refer to these wicks as spikes because they are long and sharp. Additionally, the body of the candle should be at least 2 times smaller than the spike. I've already drawn 2 examples of such pin bars. As you can see, the length of the spike is 49 pips. Meanwhile, the body of this pin bar is only 13 pips long. In general, the spike is more than twice the length of the candle body, which means it meets the first rule to be considered a pin bar. The second rule is quite similar. The wick on the opposite side of the spike should also be at least 2 times smaller than the spike. In my example, the wick appears shorter than the spike. Its length is 22 pips, while the spike, as we remember, has a length of 49 pips. Thus, the small wick of the candle is 2 times smaller than the spike of this candle. This fulfills the second condition to label the candle as a pin bar. And now let's move on to the interesting part. I have 2 pin bars, but in the first one, the spike is at the bottom, and in the second one, it's at the top. Depending on which side the spike is on, either at the bottom or at the top, a signal for buying or selling is formed. For instance, if the spike is below the body, the pin bar is bullish, and after its formation, one should consider a trade for an upward movement. Conversely, if the spike is above the body, one can consider a trade for a downward movement. Nothing complicated, right? Furthermore, a pin bar can have 2 levels of confidence. This depends on where the candle closes, above or below the opening. For example, if a bullish pin bar is green, meaning the candle closes above the opening, it is a strong signal. However, if a bullish pin bar is red, indicating that the price fluctuated back and forth and the candle closes below the opening, it's a weak signal. A strong signal is a strong signal. If a bullish pin bar is green, it is a confident signal or confirmation for entering a trade. However, with red bullish pin bars, one needs to be cautious. If there are additional confirmations that the price will rise, that's good. But without such confirmations, a trade solely based on the pin bar would be risky. In general, green candles confirm upward movements, while red ones indicate downward movements. The same approach applies to analyzing bearish pin bars, which suggest trading for downward movements. If the body of a bearish pin bar is red, it provides a more reliable signal for a downward movement compared to its body were green. A green bearish pin bar can be traded, but only if there are additional confirmations. Now let's find situations with pin bars and see how they perform in practice. So I did some searching and noticed that a pin bar candle has formed on the chart of the British pound to Japanese yen currency pair. If you haven't noticed, it's the last red candle. Here we have a spike at the bottom, and the body of the candle and the wick on the opposite side are at least 2 times smaller than the spike. But let's measure to be sure. Well, the length of the spike is 27 pips, and the length of the second wick and the body is much smaller. Only 8 pips for the body, and 10 pips for the wick. I confirm that it's a bullish pin bar, even though it's red. Let's open a trade for an upward movement, even though I spent some time explaining. Here we have the British pound to Japanese yen pair on the trading platform. Maybe it's a good thing I didn't enter immediately and miss the initial trading, because now I'm entering a trade for 3% of my deposit for 3 minutes for an upward movement. Let's wait for it to finish. There you go. The first trade closed successfully with a profit. Let's look for other situations. Next, we have a situation on the chart of the Canadian dollar to Japanese yen. Here, a pin bar has formed with the spike at the top, making it a bearish pin bar. The body and the wick on the opposite side are 2 times smaller than the long spike. The candle is green, indicating a wick signal. Nevertheless, I will trade it. I'm switching to the platform, opening the Canadian dollar to Japanese yen trade, and immediately entering a trade for 3% of my deposit for 3 minutes for a downward movement. Now let's wait for it to finish. The second trade closed with a profit. As you can see, after the formation of the pin bar, the market just plummeted. Now let's look at the third situation. Another pin bar has formed on the euro to Canadian dollar currency pair. I will not wait. I will open a trade right away and then analyze and explain everything. Let's switch to pocket option and open a trade for 3% offset from the deposit. Now I can simply calmly show the pin bar and measure its length. The second to last candle has formed a clear bearish pin bar. It's green, but it's not very important right now. This pin bar has a spike at the top, indicating selling pressure. The length of the spike is 45 pips, which is quite long. Now the length of the body will be smaller, I think less than 20 pips. Yes, just 15 pips. So the body is 2 times smaller than the spike. The first condition is met. Now, let's look at the wick on the opposite side. It has a length of only 15 pips, which is the same as the body. It's also 2 times smaller than the length of the spike. The second condition is also met. Since we have an obvious bearish pin bar, it's time to sell for a downward movement. However, it's a green bearish pin bar, meaning it's a weak signal, but it's strengthened by the fact that the price has reached the resistance zone from the top. There was already a strong bounce from it. I believe the pin bar confirms the reaction from this zone. That's why I expected further decline. Now let's switch to pocket option and wait for our trade to close. Okay, so our third trade closes with a profit as well. Nothing complicated, just attentiveness and technical analysis. Thank you for tuning in and watching. If you enjoyed the content, please don't hesitate to like and subscribe to the channel. Remember, my name is Mary and I'm dedicated to providing you with the best trading insights and support.